respect the gangster, I don't want your bitch. I respect the gangster like it don't it. Yo, yo. Alright, so we are back with another video. Today we're talking about gaps and imbalances, but this is the part 2. So, let's get into it. Alright. I took a trade today, guys. Hold on. Took my little dub skis. Should I get into this now or later? But this was pretty textbook, but let's get into gaps first. Alright, so zoom out. Alright, so we had a few gaps that we went over yesterday. We went over fair value gaps. We went over new day opening gap and new week opening gap. Now, fair value gaps are a 3 candlestick pattern. You want the top wick of the first candle, full body of the second candle, and the bottom wick of the third. Or you want the bottom wick of the first candle, right? The full body of the second candle, and the top wick of the third. I think I just said that twice. But yeah, those are fair value gaps. 3 candlestick pattern. And new day opening gaps are literally exactly what they sound like. New day opening gaps, right? So it's the gap between the previous and the next trading day. That little 1 hour that you can't trade, that's the new day opening gap. New week opening gap is from the Friday close up until Sunday afternoon when futures markets open, again, at 3 p.m. standard time, which is for me. Okay, so we have our gaps. We are going to start with this, fair value gaps. So these are fairly easy to spot. Should we spot one right here? Go to the back. Actually, I want to show you a bullish example. Oops. Sorry about that. So this was an example of a trade I took today. Why? Because I saw we tapped in here. Now you can see it's the bottom wick of the first candle, full body of the second candle, and the top wick of the third. Now what this gap represents is a lack of sell orders, right? Because there's a full just like, you know what I'm saying? Imagine it's just like a slow ass punch, right? Boom. You gotta come back. It has to come back down, right? So boom, that was a little kid bad example. But our gap is basically representing a lack of sell orders. So price is highly likely to rebalance in here and then continue going higher like it did today. So for example, we see, okay, price taps into this gap. We see buying pressure out of it. And now we can be like, okay, this is a good entry point. And then boom, take profit at these highs. Simple. That was actually the trade I took today. I took it on QQQ because I trade options. I don't really trade futures as much anymore. So boom, break is. Hold on, hold on, because it's. Hold on. We gonna get into that later. Because next we're gonna put it all together, right? I think we have equilibrium to go over, and then we have SMTs, and then we could start putting everything together at one time. So we're kind of almost done, kind of. Okay, so let's show you another example of a bullish fair value gap. That was a very good example today. All right, right here. We see top wick of this first candle, right? Boom. Full body of this second candle, bottom wick of the third. Now I'm just going to extend it so you guys can see. Right? Boom. Fair value gap. So we see price break structure here with this candle. So we know that with this gap, there's a lack of sell orders. So price will rebalance. Boom. Fulfill all the sell orders, right? And then boom, push price higher. Let's find another example. Shoot, this the best time. All right. You can see price sweeps these lows under here. Boom, break structure with this candle. Now our fair value gap would be top wick of the first candle, full body of this second candle, and bottom wick of this third one. Now I'm gonna extend it out just so you can see it. What do we see? A lack of sell orders in the opposite direction, which would be right here. So we know that if price ever comes back down here, it has the fulfillment or the opportunity to fulfill buy orders and continue in the original direction it was going. It's all about buy low, sell high, baby. That's what we want to see. Shoot. Let's find some on. We can find some on literally. There is actually fair value gaps on every single time frame, and you will see these literally all the way down to like the 30s. I don't use the 30-second, but like, bro, you will see these everywhere. So, because you will see these everywhere, means that just a little bit these might be watered down, but they still hold weight, bro. Like, respectfully. Like, a 4-hour gap is going to hold significantly more weight than a 1-minute gap. You feel what I'm saying? Same thing like all the confluences I'm teaching you. So we see bottom wick of the first candle, full body of the second, and top wick of the third right here. I'm just extending it so you guys can see. Okay, boom. We came a little bit past it and hit the wick and ended up tapping the opening price, not the close price of this candle, which is okay as long as it doesn't close through, which would then be another confluence called an inverse fair value gap, which we'll get into probably after equilibrium. Then that would be considered bearish if we just punched through this gap. But since we didn't, wham, fulfilled prices went higher. Here, example right here. We see a lack of orders in the opposite direction. Price moves up, moves down, swerves, right? And this won't happen on every single gap. Like, for example, this gap right here didn't get filled. And this is why I always say, if we see buying or selling pressure out of the confluence, then that's when we know, like, okay, let's make a move. All right. Let's see. Boom. Top wick of the first, full body of the second, bottom wick of the third. Price moves up, taps in, bam, higher. All right, so let's find some bearish examples. Uh-oh, computer's about to die. All right, bet. So, we actually see a huge gap that did not get filled. Actually, let me tell you what's not a fair value gap. This is not a fair value gap right here. Let's make sure you guys can see this. Why is this not a fair value gap? There's a wick behind this candle. We need to see no interruptions within this second candle, like something like this. We want to see no wicks in this body, or else there is no gap. As you can see, there is no gap. Okay, so this is not a fair value gap right here. Hold on, let me get my charger. All right, let's find some more examples of bearish fair value gaps. Okay, perfect. So we want top wick of the first candle, full body of the second. Oops. Top wick of the first candle here, full body of this second candle, bottom wick of this third one. These are 3 consecutive candlestick patterns. So you can see this one holds a lot of weight because there's a significant lack of orders in the opposite direction. You can see price taps in, boom, instantly fails. Price taps in again, boom, instantly fails. Right? So higher time frame, higher power. Now I'm sure this is a gap on the 4-hour too. Yep, boom. Even here. Actually, let's do the same example. So boom. Right? So bottom wick of the first candle for our bearish fair value gap. Full body of this second candle. Top wick of the third. Boom. We see price tap in. Here. Boom. Fail. Let's see. That's a nice little uptrend right there. Boom. Price taps in. It came a little bit above it, but since it didn't close above this candle, now it can be like, okay, the sellers came through and did what they had to do. So we can assume price would go lower, and it did. See right here. Okay, this is a good example right here. I do want to talk about this. When you have an instance where there is, where there's no wick, or in this case, barely any wick, you just mark out the close of the candle, the full body of the second candle, and the next one. Boom. So here's your fair value gap. Price ran through it, left a gap, taps in, poop. Like I said, this is on every single time frame. We can go to the monthly. Let's see. What do you know? As you can see, this one holds significant amount of weight because you see price came up here, tapped back in, moved higher. Now we can use, these are the things about confluences. You can use different confluences at different time periods. Like I was saying about the new day opening gaps, although they have a half-life of 5 days, that's not saying it's not invalid after 5 days because it can still be valid. Mind you, I'm on a monthly chart, so this is in 2020. Let's see. When price revisits this same gap 3 years later, it still held weight. And you can see, boom, we're still moving. Alright? Now, let's do our new day opening gaps because I think you guys kind of get fair value gaps. Actually, I might have to save it for another video. Because this one's getting pretty long. You know what? Alright, new day opening gaps next video and new week opening gaps next video. Alright, so I'll see y'all later, man.